Peter tracks commodities very closely, as amongst other things as well, and he joins in right now. Peter, good morning, good afternoon to you maybe, and a happy 2025 to you. Great talking to you today. Love the tree still behind you, Peter. Will the markets? Okay, thank you for that, Peter. A bit of a flare up in key triggers, right, or key pointers. Crude prices at 75 odd, dollar index is higher. What do you feel about risk assets?
Well, good morning, Niraj. Happy New Year and all the very best for 25. I tell you what, it's been a dynamic December. When you're looking, I'll start at US dollar index. It has really surprised everyone. I just think the momentum that we've seen through now 109 and moving towards that 110 handle, euro being crushed 102.60, every chance you could see in this month. I wouldn't be surprised to see parity. So there's the US dollar story. Aussie's being crushed as well, and yen sitting close to that 157.5. As far as Crude's concerned, if you strip out the geopolitics, I know it had a bounce, but I still think that it's going to be softer moving forward into 25, though I think it's going to remain volatile. And I wouldn't be surprised to see a mid-60 handle, considering what President Trump's planning as far as increasing production. So I think it's going to be a very dynamic time across those complexes. And if you're looking at precious metals, I think it's to the moon.
Peter, good morning. Happy New Year. It's good to talk to you the start of a brand new year. The year 2024 belonged to gold in more ways than one. As we go into 2025, apart from gold being a critical asset in terms of asset allocation, what is the outlook? Do you feel like 25 could be as solid as 24?
Well, good morning, Samina. Good to see you. I think, yes, I do think so. And I think central bank buying has just been off the chart. So it's very, very strong. If you're also looking at little brother, it's performed incredibly well, being silver. So I think that that whole complex will continue to have upside moving forward. Where we run as far as a headline, keep $40 for silver as the number to say, right, it's hit it. And then I think it's really going to have some upside if it does hit that. And gold probably close to that 3,000 plus handle. So I know it's softer at the moment and sitting in the best part of 26.70, but I feel as though you've only got to see what's happened as far as dollar and the momentum to the upside for gold. So, yeah, it's going to be a dynamic trade, and I'm sure that the retail land is going to be putting more under the bed each and every week.
Peter, now what about markets by and large, right? Just one question from my end. As we look at 2025, could it be that after two splendid years of 2023 and 24, US could take a bit of a breather and emerging markets could come to the fore? Or is it difficult to call? Because if tariffs come in and if inflation goes up and if rates go up, then money may not move to the emerging markets.
Yeah, may not. I mean, I want to be, it's such an interesting composition as far as what we see President Trump, and it's hard to keep up with him, Niraj, in the sense of what gets released on a daily or every couple of days as far as big themes that could change the whole footprint as far as the investing market over the next 90 days. So the overall, I think, the last 2 years has been astounding when you're looking at S&P and, of course, the NASDAQ. They've performed very poorly over this Santa Claus rally 7-day period. The first 2 days of January, of course, and the last 5 trading sessions of December. So they've been soft. I think that could be a start to see possibly a little bit of a sell-off or maybe just a quieter time across US equities for the first couple of weeks leading into 20 of January. And the other emerging markets, I think China's under a lot of pressure. I don't think anyone really comes close to it. I'm not just saying that for the sake of India, but really when you're looking at India, I think it's going to be a very, very strong year. I wouldn't be surprised for those gains to continue. And the overall momentum is going to be solid because it's just an infrastructure, dynamic economic situation in India. And I think that its best days certainly are ahead of it. So a different footprint compared to China.
Peter, just one last question from my end as well. We had some piecemeal measures coming in from China in the last few months of 2024, which helped the Chinese equity market do quite well or close the year with strong gains. There's also conversations or reports this morning that China could be looking at cutting rates sometime soon. Now, what does that mean for the commodity pack? And then what does that in turn mean for metal stocks globally?
Well, if you're looking, I think that China will have to do whatever it needs to do to get to where it has to go, Samina, because we've seen what's happened earlier in 24 and what the action Beijing took in the latter half. They need growth and they need to really put, I think, the whole property market and that whole investment side really to bed and try and manage those risk profiles and, of course, the debt to as far as debt to GDP, but more importantly, the debt across the property sector. Where they run, I think they'll probably, wouldn't be surprised, some form of rate cut and to try and re-stimulate across their whole, domestic market, because it's going to be tough from a tariff perspective once President Trump does introduce this. And what happens as far as base metals, you could see a softer market there. Copper still languishing at about that 8,800 a metric ton. I wouldn't be surprised to see further softness across that whole sector.
Interesting. Thank you very much, Peter. You have a great weekend and we'll catch you soon.